Now, if you've been following Seasonax, you may remember our Apple seasonal idea earlier this year. Well, this one did work out beautifully. Now, back in June, we highlighted that Apple has this very strong seasonal period from June the 10th to September the 1st. You can see that over the past 15 years now, the Apple share prices have risen on average 13.34%, with some incredible double digit returns, with a maximum return you can see of 52.39% here in 2020. And if you look at some of these max rises, they're regularly featured double digit returns. Fantastic. Now, the maximum drop was relatively mild compared to the gains. You can see the maximum loss was 16.04%. You can see that here in 2015. And the maximum drop was 19.63%. So winning trade percentage 93.33%. Yes, the drawdown can be significant, still double digit potential drawdown, so not insignificant, but nevertheless the upside and the frequency is pretty significant. Now, this pattern played out again extremely well this year. Now, if you just take a look at Apple's stock price, you can just see here at the start of the pattern on June the 10th, we can see a completion of the pattern moving up over 14%. So another double digit return. And look, the pattern also was significant. Higher highs, higher lows, higher highs, higher lows, higher high, higher lows. It also got into a decent trend. So there was potential for more in this opportunity. And what made this move especially interesting was the backdrop. Heading into June, Apple was facing a wall of skepticism. There were tariff concerns. There was a weak iPhone demand in China. There was questions in place about its how well it was doing in the artificial intelligence race, and the company was also contending with litigation pressure. Reuters reported in June that shareholders were filing a class action lawsuit accusing Apple of misleading investors about its progress in artificial intelligence. And at the same time, Financial Times noted fresh tensions with Brussels over App Store practices under the EU's Digital Markets Act, adding regulatory uncertainty into this sort of fairly complicated mix. Then came the Worldwide Developers Conference 2025. Now, many analysts describe this event as underwhelming. The Associated Press headline summed it up: Apple underwhelms at WWDC with incremental AI changes, further pressure about the AI changes. No radical AI breakthrough, that's what really hung in the air. But Apple still did announce meaningful software upgrades, including on-device live translation across messages, FaceTime and phone calls. So this did, according to S&P Global Market Intelligence, help lift ever so slightly iPhone sales expectations slightly for the year. And services growth also got a little nudge higher. So technically, the setup, however, was really quite strong. If you look at Apple on the monthly chart, you can see this bottom we got in April. Look at this long-tailed hammer reversal bar on the monthly chart. Clearly trending market. High highs, high lows, high highs, high lows. Right? High highs, high lows, high highs, high lows. Pullback, strong hammer reversal. Right? We then have a near Harami inside bar in the middle of that long reversal pattern, and then we have almost an inside bar break to the upside, 3 inside bar up pattern. Not quite, but it's that kind of feel, right? So in other words, this drop that we had in April, that you can see here that I was marking out as a significant bottom, that was a very significant area, and that just showed that 170, 180 region was a really decent bottom area. So that just meant that, buying in, even from dips down, we saw we'd seen double digit fall. So even if we got another double digit fall down to sort of 14, 15, 16%, You can see with the seasonal pattern that even when we had a 10% drop, still was a positive pattern. So even on a 10% drop, right, you could see that there was potential for support buying because of this decent technical dominant hammer reversal bar. I remember with technical analysis, the higher time frame has greater authority than the lower time frame. So obviously a significant reversal pattern on the monthly chart is far more significant than a reversal pattern on the 15-minute chart. So this is very strong, and you can see there's 50 exponential moving average. You know, price has not been underneath that 50 exponential moving average, you know, since 2008. So if there's a bottom to be had, you know, that was going to be it. So we got all the confluence we wanted there. Decent seasonal pattern, great monthly, decent seasonal pattern, great technicals. And you can see here, even just a breakout, that a simple trend line break would have got a good opportunity here. You see price broke above this trend line on volume. And there was some good news around this time where Apple shares were climbing on news of a domestic manufacturing pledge in the US. So that was seen as very positive for Apple stock and really pushed it higher. So really this is a decent case study of a strong seasonal bias, right? A solid technical floor, high profile events operating as catalysts, and macro noise really created opportunity rather than fear, because, you know, those drops that we'd seen in historical times were just really going to be dip buying opportunities most likely. So if you would like to uncover similar high probability seasonal windows across stocks and indices, head on over to Seasonax. You can explore thousands of patterns, and you can see historical volatility, you can see maximum drops, maximum rises, to really drill down into the detail and help time your trades with greater conviction. Remember, don't just trade it, Seasonax it.